The thing that libertarians love about Bitcoin is the true ownership element. You're addressing an institutional market, and to some degree, you don't have to worry so much about that side of things. You believe clearly that ETFs are an effective way for institutions to prosecute this market. Could you tell us a little bit about how Bitwise approaches this?
Sure, absolutely. Yeah. I think, look, ETFs are an extraordinary tool for accessing almost any market, right? They let any institution or individual access a market on the same terms as the largest institution in the world. So, when we built our Bitcoin ETF here in the US, or indeed our Bitcoin ETF over in Europe, they operate relatively simply. On any given day, we'll get inflows of cash from investors who are looking for exposure to the market. And let's say on this day, we get $100 million in. We will go out to the largest market makers in the world. And these are true institutional market makers, firms like Jane Street and Susquehanna and DRW and Citadel, like the largest names. And we will buy Bitcoin at the best available price. And that immediately goes into cold storage with the largest institutional custodian in the world, which is Coinbase, with insurance in place where you can see the assets on chain. The beauty from an institutional investor perspective is everything is taken care of for you at institutional level. You don't need to be an expert on crypto custody because Bitwise has been doing this for 7 years, and we due diligence all major custodians on an annual basis. You don't need to be an expert on taxation because KPMG audits the funds and prepares tax reports. You don't need to be an expert on trading, on liquidity. The ETF takes care of all that, and you can just access it the same way you would access any other share, any other stock or bond or ETF. You can buy it in this package, and the fee is extraordinarily cheap. In the US, it's 20 basis points, which is quite a deal. So it makes it easy. And for an institution, I think it's the lowest cost way to access this market.
Is there any single point of failure between your end investors, through you, through to the market makers, through to the custodian?
I mean, it's worth, when you own Bitcoin, what you own is a password. The password allows you to unlock this digital asset and move it somewhere else. So when you own Bitcoin, what you own is a password to that Bitcoin. If that password is lost, stolen, or compromised, it's the same as someone stealing your gold bars. It is lost and gone forever. The way the Bitcoin ETFs operate is we enter into a bilateral trading agreement with Jane Street, and they deposit the Bitcoin directly into our custodian, which is in cold storage, which means a computer that's not connected to the internet, where that password is broken up into different pieces and stored in different ways. So you would have to reassemble each piece and put them together and ship them out. If there is a point of failure, the malicious actor would have to figure out a way to hack that custodian and put those pieces together and steal the Bitcoin. And then there are protections in place, including insurance and sort of fracturing the Bitcoin into different wallets. But just like a gold ETF, if someone breaks into HSBC's vault and steals the gold ETF suffers. If someone breaks into a Bitcoin ETF vault and steals the Bitcoin ETF would suffer. We haven't seen that, obviously, at Bitwise for the past 7 years, and we're comfortable with the security arrangement. But that would be the theoretical risk.